This is Frontier Opening Bell, or product program of Frontier Africa Report. I'm Temple Ashaji. Thank you for joining us, gentlemen, on the show this morning. With us on the program, we have Segar, Ali Segar, our professional services firm with Segar and Associates. He'll be speaking to us and analyzing the North African markets today. He joins us from Dubai. Thank you for joining us on the program. We've got Luke Ofer-Jebe of the team lead for equity research at Vetiva Capital Management. Thanks for joining us on the program this morning. Bosun Amofaye of Frontier Africa Report. We appreciate your presence on the show. Let's quickly look at the market indices. For key segments of Africa, Nigeria specifically was up 57 basis points on Thursday. Ivory Coast, the BRVM exchange there was positive by 30 basis points. Egypt Stock Exchange rose by 0.45%. Kenya was down yesterday by some 25 basis points, and South Africa positive by some 0.67%. Now we move on to the headlines from East Africa, where Kenya Treasury opened sales of new bond eyeing some 50 billion shillings. CIC Insurance issues notice of likely lower full year earnings. Ethiopia, for Ethiopia's story now, NIB International Bank nets a profit of 44% to 1.04 billion birr for the 2019-2020 calendar year. Merge Exchange, one of the fastest rising digital exchanges, grants listing of new 2.6 million ordinary shares of Minerverse, and of course DSE Capital posts some 32% rise in profit after tax. Bosun, I'll hit you with these headlines from eastern part of Africa. What can you tell us?
Yes, I think the biggest story for East Africa has to do with the economic contraction by Kenya, which came in yesterday at 1.1%. That's the deepest since almost 20 years. Kenya had not been in an economic recession. But of course, when you look at the 1.1%, the agri sector still grew 6.3%. So throughout last year, Kenya was doing, well, not so bad when you talk in terms of horticulture, in terms of what you call the flower business. They export this to a whole part of the world. Then you have the tea production, a little bit of coffee production also from Kenya. So the contraction could have been, look at Nigeria, we did about 6.13 or so, about 6%, a little above 6%. This is Kenya doing a contraction of 1.1. That tells you the role that agriculture and agro-allied industry will play in your economy for a number of African economies, in particular those in the sub-Saharan outside of North Africa. And this is important story for Nigeria as well, that if you get a whole lot of agricultural, agro-industrial value chain, processing, whatever, right, we could be able to mitigate some of this problem. Kenya, without a drop of oil production in the major oil markets and whatever, was able to moderate this contraction to 1.1%. And that is one good news for Kenya. The second story has to do with the DSC, which is the last story you talk about, the Dar es Salaam Stock Exchange, which is a PLC. Nigeria is working, becoming a demutualized exchange and all of that. This Dar es Salaam Stock Exchange posted a 32%, I think 32.4% profit after tax for last year. So despite the pandemic as well, this is part of the global financial markets success story for 2020, despite the global pandemic. Merge Exchange on Seychelles Island is a coin-based exchange, started a few years ago on the Indian Ocean off the coast of East Africa. And they're doing pretty well in terms of attracting some very unusual investments and issuers in their markets, those around Coinbase, cryptocurrency, digital technology company, and what have you. And it's, I think, one of the newest exchanges on the continent we should all keep our eyes on. Thank you.
Thank you very much, Bosun. We appreciate all of those analyses. I mean, it is noteworthy that Merge Exchange is one of the fastest exchanges, as you mentioned, and they've listed Burdock Industry, a Chinese global agricultural firm. They've also listed a corporate Investment Evolution Corporation, which is a U.S. Consumer finance group. And it is noteworthy whatever they are doing and in that region. Actually, let's move on now to the Western African markets, where Nigeria redeemed some $500 million of 6.75% in Eurobond. The central bank kicks off revitalization of moribund national commodities exchange. We also know that the CBN is mounting pressure on exporters for dollar repatriation. We understand that is going to help Naira and improve and give some sort of stability to the local currency. For Airtel Nigeria, they paid some 71 billion naira, which is an equivalent of $178 million for 10-year spectrum license renewal. Mali raised some bonds. Guinea-Bissau also raised some treasury bills, and Ghana disbursed some $15 million capitals for the new National Development Bank, something in line with what Nigeria did a couple of years ago. Luke, let me come to you with the central bank headlines there. I mean, if you want to aggregate what these three headlines that are related to the central bank, what can you tell us?
Um, Thank you very much for the question. So on the Eurobond updates, I mean that was expected really because if the government had failed to redeem those Euro bonds, the implication is that it's going to increase concerns on foreign exchange risk in the country because I mean you don't want to heighten the current risk we have on foreign exchange where investors begin to panic when government fails to redeem um, some of its Eurobond obligations to investors. So that was expected, but with regards to that, do we expect to see Eurobond issuances this year? No, and that's because of that's still because of the exchange risk we still have in the country. I mean, we all witnessed what these foreign investors experienced last year. So due to limited FX supply, a number of them could not exit the Nigerian market as and when due. As a matter of fact, some of them are still stranded. Uh, and the expectation is that we'll still expect to see this inadequate FX supply play out in 2021. So given this, we do not expect to see any Eurobond issuance this year because for potential investors, I mean, they are still worried about that. So they will just want to, keep their money in other economies where they believe foreign exchange rate is relatively more stable compared to that of Nigeria. Then on the commodities exchange, I mean, that's long overdue, really, for you to have like for you to industrialize the economy. You can't do without having a commodities exchange because it's really helps in terms of budget planning for companies that want to ensure that they want to ensure that there is a stable flow of input costs. So you don't want to be experiencing sharp volatilities in input costs. So you want to go long on futures contracts whereby in 3 months time you want to pay a pre-agreed amount of money for the amount of raw materials you want to buy. So you need that sort of environment for businesses to really thrive in Nigeria. So um, that's long overdue. We should expect to see. We should be putting more pressure on the government instead to actually, um, revamp this commodities exchange and consequently help to boost businesses going forward.
Right, thank you so very much. Bosun, do you think the commodities exchange revitalization ties in with the central bank's prioritization of the gold commodity at this point in time? Something that will help them bring all of those gold commodities to that exchange and be able to trade for price discovery and the rest?
I don't think there is anything much I can add more than what Luke Ofojebe has asked. Setting up a commodity exchange for any agro-producing country in Africa it's a no-brainer. There's no need for any conversation whether it should happen or not. Although for some countries that, if you look at the size of the country and whatever, they could have a regional commodity exchange. For example, Central Africa could have one. West Africa could have one or two. Ghana already has a commodity exchange. So the rest of the French-speaking West Africa could do one like the kind of BRVM, which will include what the cotton that's produced in Mali, in Niger Republic, and all of that, and what is also produced in Ivory Coast, cocoa, cotton, and a few other products. For Central Africa, with Cameroon in there, they could do a whole lot of banana, plantain, whatever that they produce. So that will also be very good. Now, for Southern Africa, that would be good. For North Africa, I know Egypt is working on a commodity exchange, which was mentioned just about a month or two ago. I'm sure Ali has that under his fingernails. But for Nigeria, we can have so much agro produce, northeast, west, central, without a commodity exchange, including mineral resources, so what you call the metals and what have you. So I don't want us to spend too much time on this. This is a no-brainer. This has to happen like yesterday. They should have both the spot market and the futures market. And the guys who are complaining, who have set up some of the futures exchanges for commodities already, should not complain that the central bank or that the government is getting into this. I remember that the Ethiopian Commodity Exchange was set up by the Ethiopian government under the previous administration, but it was run as a private sector. Go on their website, very profitable and well-run commodity exchange, even though government is a shareholder. So there's nothing wrong with the central bank being a shareholder in this or midwife in it. Number two, Egypt is also working on the same exchange. Is going to be midwife by the Central Bank of Egypt and the government as well. Look, the government can midwife, does not necessarily mean the government will run it. So I don't see any fear of any private sector here. And the central bank laid out the process involved the Nigeria Sovereign Wealth Investment Authority. That's Nigeria's wealth management agency. That's good news. Involve the Africa Finance Corporation, which will also be part of the, that is also good. So I went back yesterday and I read through all over again the Ethiopian Commodity Exchange, and I think it's a good model that Nigeria can follow.
Right. Thank you very much.
And I'm sure Ali has his comments on that.
Okay, so Ali, a penny for your thoughts on these developments.
Yes, I think it's necessary. To be honest, it's necessary to build this commodity exchange across all Africa. And as you said, each region can be specialized in one type of commodity. Because as of today, you know, all these commodities are, we can say, traded elsewhere than Africa. But Africa is one of the biggest, we can say, producer and even sometimes consumer of this commodity. So it's not normal that Africa don't have a word to say about this commodity. After the rest, as you said, you know, for me, also the regulator can regulate, you know, and can structure the approach of the commodity market. The issue is that in some of the countries, I speak about Egypt and all this, there is a tendency of the regulator coming and run the market. And I think it's quite dangerous for commodity market. They need to structure it, to have, we can say, to put a framework on it and all this, but not to run it. Because if they run it, private sector will not feel comfortable necessarily. So I think they need to have a push from the regulator, but after this push and this structuration of these commodities, they need to let it run by the private sector.
Right. Thank you very much, Ali. Let's move on now to the Southern African markets, where the informal business posts 24.6% turnover rise in the third quarter of 2020. Slew Energy seeking to raise some $30 million funding for the Lesedi Power project in Botswana. The Bears Group says its rough diamond production dips by 14% in the fourth quarter of 2020, and Zimbabwe inflation rises to 14.04% year on year as of January 2021. Bosun, I'll come to you with this again. Let's hear what you have to tell us about these headlines, starting from South Africa through to the power energy and energy sector rather in Botswana, and the plans they have to raise funding for the Lesedi Power project. We can hear you, Bosun. Your mic is off.
My apologies. What they call the rough diamond was a very tough year last year for diamond market all over the world. The BS complained. Botswana had a rough patch because the ultra wealthy and very rich billionaires around the world were not buying diamonds. So mostly in the first half of the year, towards the second half of the year as well, we started seeing a little bit of uptick towards the end of the year. So the big producers like the BS and Botswana Diamonds and the rest were just doing very little production because the market was not there. But we're getting news that now online, everyone seems to have understood how the virus works, work from home. Folks are a little bit more managing or structuring their lives around the pandemic and what have you, the vaccine hopes and all of that. So it looks like folks are now going online. and shopping for diamond as well, which is good news, by the way. It will help economies in Southern Africa like Botswana and a few and others. The informal business sector in South Africa posting 24.6%. That's just the way it should be. You can see that while the formal side of the economy is in doldrums, the mines have some of their own problems, the big businesses. This informal economy or informal businesses, as we call it in Nigeria as well, had a 24.6% turnover in third quarter. That tells you that this is where some of the businesses are going on. So I was encouraged by the Tourism Trust Fund or Tourism Fund, which was announced 2 days ago by the South African Authority for the Tourism Industry, 1.2 billion rand, to help Black owners of tourist centers begin to rebalance themselves, get back into business and all of that. And we're happy that the footprint of the virus is also moderating a little bit. Inflation in Zimbabwe has been a historical story of hundreds of percent, around 700, 600% by the way. So this was not really much of news, as it were. But of course, we can use any data on the market. Kumba iron ore full year earnings forecast 44%. Iron ore is really hot right now. If you watch the news, the whole market in Asia is really, really hot. Headline earnings per share of 68 rand, lower end. That's not bad, by the way.
Look, do you have anything to add to maybe the Zimbabwean inflation compared to what we have in other jurisdictions?
Susan has said it all already. And for us at Vetiva, we actually don't cover the South African market.
Sure. Okay, now let's move on to North Africa, where, of course, we'll be getting the some analysis from Alice Agar now. We know of the Obasanjo, Kagame, and additional others, you know, observing or commemorating the African Union NEPAD 20 years anniversary. And of course, Egypt is paying some 10.3 billion pounds in overdue export subsidies to over 1,000 companies. Misr Hotels, they're reporting a loss before tax of 106 Egyptian pounds for the half year 2020, and EBRD signed some 20 million euros risk sharing facility with Attijari Bank of Tunisia. EIB also signed an agreement with Morocco's small business company, which is Judaid. They got some 108 million dinars in terms of loans now. Ali, let's come to you with these headlines. Give us a sense of your understanding of all of these headlines.
Yes, sorry. I think, you know, this headline shows, especially the two last ones, shows a big, we can say, need of support for the small companies in North Africa. In this case, it's for Morocco and for Tunisia. All these small businesses, they don't produce a lot, but the issue is that they produce a lot of jobs in these territories in North Africa, so in Morocco and in Tunisia. They have been really, we can say, slapped by the COVID-19. This company suffers a lot, you know, because this company have suffered COVID-19, so less consumption. There is a big issue. So there is a need of support of this company. I think Egypt, with also this subsidy to export, you know, to facilitate the export of the companies, is also a good news for these small companies to facilitate the export. The issue is that all these loans and all this is not a sustainable way to manage economy. At the moment, all these small companies and even the export companies need to face a market, and they need to be, we can say, profitable by themselves, in fact. So this is perhaps just we can say a gesture to facilitate the solidity of this company, but in the long term, it's not sustainable. They will need to find a ways to export and to be more profitable by themselves.
Okay, so Ali, anything to say about the Misr Hotels loss before tax of 106.5 million pounds? This is a very strong company, a very strong hotel and tourism company in Egypt. I mean, we all know how the COVID-19 has actually impacted companies, the hospitality sector and tourism sector around the world.
Yeah, so this is very, we can say, worrying for the whole, we can say, tourist country in North Africa. So mostly Tunisia, Morocco, and Egypt. You know, these three countries relies a lot on tourism, and tourism, to be honest with you, will not restart tomorrow. So these losses will accumulate. So it's really bad news for the tourism sector in the whole North Africa. We can say that all this North Africa have relied a lot on, we can say, external tourism. So it means, especially from Europe, US, there is no, we can say, development of local tourism and of regional tourism. This is one of the main issues that the tourist sector is facing in North Africa. You don't have a lot of local and domestic tourism, in fact. So as soon as international flights are, we can say, are damaged, the tourism sector is automatically damaged. After, there is also some other aspect on the security on all these countries, so Tunisia, Morocco, and Egypt. The security is not necessarily big, in fact, and not necessary, and they are not necessarily safe countries everywhere. And with the economic situation, the security is also, we can say, decreasing everywhere in these countries. So on the long term, also, the government has to find a way to fight to sustain this sector, to support this sector, but also to, we can say, to increase the security in these countries.
Thank you very much, Ali. Let's finalize the show now with some thoughts from Luke again. Luke, this week, if you could reflect on the last five trading sessions or the last four trading sessions preceding today, what's your review considering how Airtel has actually surged all through the week as well, and the developments around their renewal of license for the Spectrum 10-year program and all that? I think your mic is muted.
Sorry about that. So for the Nigeria's equity market, we've seen more positive trading sentiment. I mean, week to date, the market has gained almost 3%, and that was mainly driven by the gains we saw in banking, consumer goods, as well as industrial goods. For the oil and gas, the story is quite different. We've been seeing more of profit taking. So, I mean, a couple of weeks ago, we saw a significant rally on Adova PLC, but recently we've been seeing more of profit taking on that stock, and that has been dragging the performance of the oil and gas sector. So what do we expect going forward? I think we'll be seeing more of positive trading um, sentiments in the equity markets, and that's going to be driven by corporate releases we'll be seeing. I mean, so last year, we are all aware of the impact of COVID-19 on a number of these companies. We saw some of them reporting losses in the second quarter. And for the ones that don't report losses, their net profits declined significantly. So given the fact that we're already in a phase of recovery, we expect that to translate to improved corporate performance, and that should consequently support trading sentiment. And we've already started seeing that. We saw results released by J. Berger, Flammy, and a couple of other stocks as well. And consequently, we saw positive trading sentiment on these stocks. So I think going forward, we'll be seeing more of that. However, given the fact that market activity um, is mainly influenced by domestic investors, given the lackluster participation from foreign investors. So we think we'll be seeing more of an undulating trend in the equity market. So when a stock gains about 15%, in the next couple of trading sessions, it's expected that these domestic investors will begin to take profits. So we might see that kind of pattern play out in the equity market going forward.
Thank you
Thank
very
you.
much, Luke Ofojebe of Vertical Capital Management, for your analysis on some of these headlines this morning. We appreciate them. Ali Segar, a professional services of the professional services firm Segar and Associates, based in Dubai. Appreciate your thoughts on wonderful contributions on the program, especially on the Northern African markets. Thanks a great deal. Also, Namo Faye, our executive editor at Frontier Africa Reports. We appreciate your broad knowledge, understanding, and contributions, and of course, leadership on the show. Thank you so much. I'm Temple Ashaji. This has been Frontier Opening Bell for the last edition for this week. I'm Temple Ashaji. I'll see you next time. Bye for now.